It's only entertainment.
Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business podcast.
All right, we're here at MJ BizCon, day one with Rick and Richard Batenburg with Cliintel Capital.
Cliintel Capital.
Cliintel Capital. I had it right the first time.
Capital, yes.
All right. What is Cliintel Capital? How did you guys get in the industry? Tell me a little bit about you guys and the industry itself with Cliintel Capital.
Sure. Go ahead, Rick.
So right around 2015, so previous to this, I was working at Merrill Lynch. I did all the syndicate, the IPOs, the new issues. So managing some money over at Merrill Lynch and then doing all the new issues and doing a little bit of private equity work. In 2014, Rich had already made some passive cannabis investments. And then when I left Merrill, we started a VC fund, and we actually became the first qualified institutional investment capital firm in the country to hold a licensed entity inside of a fund. So originally it was our intention to do turnarounds, and then when we got in the space, we started interviewing potential acquisition targets, and we're like, show us your P&L. They're like, what's a P&L? And we went, oh no. So what we ended up doing was buying everything in the supply chain. So grow, extraction, dispensary, and then everything ancillary as well. Rich's background, entrepreneur of all different shapes and sizes, but most previously to doing the VC in cannabis, he was working in SaaS, big data, running the back end for Time Warner, Cox, Bright House.
Comcast in particular. So our expertise was in business process redesign and metrics around measuring those human factors, engaging with systems and tools. And what I found was the cannabis industry, so this is 2015, 2016, looked very much like the cable industry did back in the 70s and early 80s, because it was a lot of mom and pop operators that had a great deal of passion for the product, and but they didn't have a lot of like what I would call corporate governance experience and scalability in their operations. So after spending many years in cable trying to really fix those problems that were born of the roll-up that happened in cable, which is why cable companies still can't get a technician to your house at the time they say will. It's really not the people in cable, it's the back office systems. My thought was maybe I could stop this before it happens in cannabis. That was the original intent, and it was to be more of a consultant and a financier, right? We found out very quickly, as Rick was saying, that we had to become operators, and the space was so exciting and didn't really have anything as far as infrastructure, anything from software to banking to insurance or
even just traditional business acumen across the supply chain. So over 2015 to 2017, we acquired or bought or started.
You built a lot of stuff.
Components of the supply chain. And then 2017, once we felt like we had a diligence baseline, we really went, okay, where do we want to be in that supply chain? And we're like, okay, we don't necessarily want to own the farms growing the grain to make the Grey Goose. You don't necessarily want to own the dispensary or the liquor store that only has geographic loyalty. You want to own the brand, right? So that's when we went out, we became the master licensor for Clear, and knowing we wanted to be in brands and distribution, because that's got the most scalability in our opinion. So we acquired the Clear fully as part of a 351 transaction in April of 2019, consolidated 5 different portfolio companies as part of a strategy to get to liquidity. We also bought out as part of an APO transaction out of Texas to make sure we had the round lot shareholders for liquidity. But generally speaking, we acquired the Clear because it had such a strong brand presence in California, such strong distribution, and it really was a brand that came to fame really because it was good, right? Because again, California 2013 through 15, there's no marketing, right? So the product became famous because it was great, right? So really, if you start with that as the foundation of any cannabis brand, right, and you can build from there, because it doesn't matter what celebrity's endorsing a product, at the consumer level, they don't care.
They don't
care at all.
But I don't think they care about brands either yet. I think you're early to the game where it's still THC at the lowest price point. You mentioned picking up turnaround companies or maybe distressed assets. I think we're seeing that on the West Coast more than emerging markets, obviously. And I think some of I'm going to throw Select out there because they've spent $800, $900 million on Oregon companies. That is, half as bad as Oklahoma, but that doesn't mean it's good. It's still the dirtiest shirt in the room on the West Coast, or maybe California is. So what is a Time Warner AOL equivalent where you have massive valuations and in the future is going to have write-offs where Aurora's written off $1 billion, Canopy's written off $3 billion. That's going to keep happening with malinvestment.
It absolutely is. And what happened was in November 2018, it was 183 times forward earnings was the average multiple in the cannabis space in November 2018. So speaking from the investment bank side, if I could raise money at those valuations, you absolutely do it, right? The problem was they were selling to investors that were misinformed, at crazy high EPS, and they were doing that simply because they could, right? Then what they were doing is going down and trying to correlate non-correlated assets to try to get their revenue to catch up to their valuations.
Which
and lo
can
and
never
behold,
happen.
Didn't
can
work.
never happen.
Well, because
I was saying during this time when we were raising it, because we did our raise at 8 times.
Right.
And everybody else was like 140, 135
Well, that was
average
just in
or
the
something.
in the public
I was
markets.
like, what guy wants to be, or gal wants to be the CEO of a company that's made that kind of promise to the investors that they can actually turn a profit? It's impossible. It's crazy.
The Canaccord Genuity guys, all the IB guys there saw an opportunity to raise a bunch of money, right? Because remember, IBs don't care what the valuation is as long as they can sell it, right? So they're going to raise as much money as they possibly can, and then all of these companies, whether they be, whether they were a SPAC or not, they were SPACs, right? These are companies put together by bankers that goes, oh, we can raise a bunch of money, and then we're going to go down and buy a bunch of distribution assets and grow assets. And the problem was they had absolutely no operational infrastructure to oversee those assets, and they gave gold handcuffs to all the operators who were no longer emotionally involved with the success of the company, right? So lo and behold, of course that doesn't work, right? So you've got a bunch of operators that are no longer invested in the success of the company, who got a big check and a bunch of stock, but now all they're doing is watching their stock crush, because guess what? The revenues aren't keeping up with the projections, right? So there's an attrition happening right now, right?
Tell me about that. With the consolidation, you're going to have capitulation, meaning companies that don't understand how to get that strategic partnership are going to fail.
Absolutely.
They're going to be a Larry's Handy Mart in a world of 7-Elevens if they don't use first mover advantages.
You got it
so
exactly.
Tell me a little bit about how that consolidation is going to play out and what role you guys are going to play.
Absolutely. So here's the key, right? Brands and distribution. Brands establish an emotional relationship with the consumer, because right now, the bud tender has the most to do with the supply chain of what they decide when they walk into the store. That, as you mentioned earlier, is beginning to shift, right? Brands, people are starting to walk into a dispensary with an idea of what they want. So what that means is the power gets taken away from the dispensaries and given to the consumer. And we're seeing that happen right now as we're getting more ubiquity, okay? The distribution is the key, right? So dispensaries right now have the only ability to distribute product outside of delivery, right? But we've already seen this in other markets where we see increased delivery, increased direct to consumer, right? And as that continues to increase, right? You've got Ease, you've got Ginger, you've got these other companies that are going direct to consumer. We're going to see that power shift, guess what? To the consumer and to the distribution. So our key, right? When we're ever looking at acquisition targets or roll up, is we're looking at brands that have an emotional relationship with the consumer, right? And we're looking for brands that solve a specific problem for a specific demographic, right? So when we're looking at and has strong
It's a
distribution,
consumer packaged goods
right?
play.
A lot of the investment was in 2019 pre-COVID, was maybe accurate dosing, marijuana lounges, MSOs.
Sure.
We're in a new normal.
I'm not sure I would say marijuana lounges was a big investment in 2019.
No, I don't think it was a big investment. I think there was a lot of talk about the potential for that investment.
Right.
When you look at the crystal ball predictions of how people thought that 2019 was going to roll out, the reality of it didn't quite meet.
Oh, of course.
Yeah,
Now
a
with
lot of
most-
other factors.
We don't
that
have a
happen.
clear crystal ball.
Yeah.
What is your crystal ball now, post-pandemic?
I call this the snow day effect.
Okay.
So the reason I call it the snow day effect is that you wake up in the morning, you're a kid, okay, and there's 4 feet of snow on the ground. Everybody's got to make a new plan. Okay, so what happened with COVID was everybody had plans, and then we had the snow day, which means everybody had to make a new plan, right? So the world shifted dramatically. So if there's one thing that's consistent within this space, it's that you have to be nimble because the plans are going to change, right? You don't have a plan because it's going to be right. You have a plan so you know when something changes. And right now, what's going on is everybody had to make a new plan, right? So the companies that were the most nimble and the most, let's call it, flexible and ability to change their strategy, right? Because if you were heavy into marijuana lounges, as you previously mentioned, COVID, you're toast, completely toast, right? So being nimble and understanding, and that's part of the reason we've taken a very VC approach to this, is going, okay, well, hey, we can take a big step back and kind of adjust our strategy based off of what we see the current regulatory environment, because changes at the county level, the city level, the state level, the federal level, and the international level, right? So making sure that you own the consumer, in our opinion, right? So the next 3 years, okay, is all about the consumer, right? Making consumer-driven decisions, not making, okay, well, what margin? So we also own a 60,000 square foot grow in Colorado, which prints money, but it's capital intensive and it's going to get scaled back only because, guess what? As we get ubiquitous legalization and you have the ability to move it over state lines, we're using more processed goods, which means I no longer care the quality of the bud structure. I care about if I can go for $4 a pound in Kansas, right? Because I'm processing it anyway.
I think all of this really boils down to simple fundamentals. Most of the investment that has come in this space, no matter whether it's software, training, delivery, brick and mortar stores, cultivation, even manufacturing and brands, has been based on how much money can I make in the next 18 months or less. And that's the fundamental problem, really.
Yeah.
Because nobody's really making a plan that is looking 5, 7, 10 years out. Everybody just wants to exit. How am I going to exit? Who am I going to sell this to?
I'm assuming you guys have a plan, though. So if somebody's watching, whether it's India, South America, Azerbaijan, or anywhere else we've got people watching, where can they contact you to find out how the markets are going to be playing out? What's your contact or social media? Where are you at?
So the simplest way to get to us is through LinkedIn. Google our last name.
Okay.
We've got
Batenburg's fairly unique.
We've got lots of commentary, and I think the credibility comes from, we're on record as far as 5 years back, calling things that happened, last year. So really the key to this comes down to one thing, which is you have to understand where your position is in the market, and not what's going to be important in the next 6 months, but what's going to be important 10 years from now, right? When you're looking at the cannabis industry, do you think you're going to be looking at what dispensary chain do I like?
Right, no.
Probably not, right?
No.
So thinking about when you're making those type of investments, understand that cannabis is going to grow. We see it pro rata, we see it across the board as far as regulatory across the world, right? So you got to start thinking about, okay, bet on the industry as a whole. Like if you're talking about taking a position from the public markets, buy the market and wait, right? Because trying to individually pick stocks is a mistake, in my opinion. And I've thought that for a long time, not just in cannabis. But if you want to bet on cannabis, right? Bet on cannabis. And if you want to do venture, call us.
We'll have their contact information in the show notes in the description. So with that, we're going to roll this one up. I want to thank my guests, Rick and Rich Batenburg.
Hey, thank you so much for having us.
Appreciate it.
Appreciate it.
Thank
you.
I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe. Or don't. Add them out.
Don't forget to smash that like button on your way out and check out these other videos that we've got.